It's Tuesday. That means it's Trading Tip Tuesday. Let's take a look at some lessons that I'm still trying to learn. Lessons that are as old as time. Lessons that will make you and me more money. It's kind of a three-fer today. Rolling all this into one, all saying sort of the same thing. First thing, trend is your friend. Learn to identify trends easily and just stop counter trend trading. Just stop it. You stop it. You hear me? Listen to me. You stop it right now. Unless you are extremely sniper pinpoint like on counter trend trading, you will lose money. Most people can't do it. Most people will never be able to do it. Most people, they see a chart like Ripple and they say, this can't keep going up. I'm going to short it. What happens? They lose money. They lose money. It's that simple. You can't counter trade the trend, especially in crypto, because stuff gets so out of whack, so euphoric, so quickly. Again, Ripple comes to mind, just what's happened over the past couple days. You can't short it. What are you doing? Okay, that's one thing I'm good at. Personally, I'm good at that. I'm worse at the other two things, but I'm really good at identifying the trend because of the cloud system, because of EMAs. I'll show that. So don't do that. Just say, is it bullish? Is it bearish? If it's bullish, I'm going to look for longs and not look for shorts. If it's bearish, I'm going to stop trying to buy knives. I'm going to stop trying to think I'm a hero and buy the low. And I'm either going to look for shorts or I'm going to look for long-term bids and just sit on them. The trend is your friend, okay? That's the first thing. Second thing, let the runners run. I love this because it says runners run. When else can you say runners run? A runner is a position that is in profit. If you're in profit and it's a trend, not a counter trend trade, if it's on trend, letting the runners run means keeping the position open. Most of the time, people, including myself, will close a position way too early. I got a perfect example for Ripple here in just a second. I'll show you what I did and what I did wrong and how to fix that, how to correct that mistake. Unless your mindset, unless your trading plan is, I'm going to 2x this position, I'm going to close it immediately upon 2x, or I'm going to take 20% off the table, whatever the case may be. If that's your trading plan, great. If you go in with a loose trading plan and you don't let the runners run, you're leaving money on the table almost invariably all the time. Most people are too impatient. Most people are looking at charts too often. They're taking trades they shouldn't be taking. They're closing trades they shouldn't be closing, including myself. That's, it's definitely me I'm talking about here. But I know a lot of people are like that. And number 3 is like number 2, money is made by sitting, not trading. Most people think, I'm a trader, I gotta trade. I gotta push some buttons, right? Wrong. Your job is to identify risk, identify reward, make the associated trade, and let it be. One thing Jesse Livermore said, somebody who's probably revered a little too much in the trading community, I think he committed suicide and died penniless, but you can look that fun story up on Wikipedia. It was never my thinking that made big money for me. It was always my sitting. Always the sitting. Always doing nothing, sitting on your hands. Either sitting on your hands, watching the chart play out, or sitting on your hands, leaving your position alone. Something else I found funny that I think about frequently, Fidelity did a study on who the most profitable accounts were. What were they doing? How were they making so much money? What was their trick? Were they actively trading every day? Were they moving into sector rotations frequently? Were they aggressive? Were they passive? It turns out, I love this part, Fidelity had a study in which accounts did the best. They found that they were dead. Not really, but they found that these were people who forgot they had accounts at Fidelity. Again, illuminating the fact that in general, stocks, crypto, they have a propensity for bullishness. HODL is a meme because it works. It's that simple. We're talking about sitting on your hands. We're talking about HODLing. Maybe not Ripple positions long term, but HODL is a part of this whole genre of advice in which that most things have a propensity for up over down, unless you're talking about altcoins. But if we talk about what I did, we'll start with this one. What I did for Ripple. This is just one example that's fresh in my mind here. So for me, I see that there's a bullish trend on Ripple, right? That's number 1. Are we bullish or bearish? Just pop on the 200-day moving average. You know, pop on the cloud. Let's take a look at the cloud. What does the cloud look like? If we're above the cloud, we're bullish. If we're below the cloud, we're bearish. Same thing with the 200, right? We actually bounced on the 200 a few times here. So at the very minimum, you should have the ability to figure out the trend down. That should be the first thing anybody should learn how to do. Figure out the trend. Bullish or bearish. You should be able to snap, see it, boom. No thinking, no subjectivity. Bullish or bearish, right? You can see historically over time, it's been mega bearish. Below, 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 popped up below again, popped up below again. You could say to yourself, okay, it popped up here, maybe this isn't bullish, right? I'm gonna wait. I'm gonna wait for these touches. I'm gonna wait until it's back above the cloud, recently, right? So very clearly, it recently got bullish at around 28 cents, 30 cents, right? What's something else you can look for? We know it's bullish. We're looking for trend reversal here, right? Because historically, it's been mega bear, mega bear. Trend reversal. Is there a pattern here? This is another thing that just takes some limited knowledge to figure out, okay, does this look like anything that I can associate with trend reversal? In this case, it was a ugly looking Hunchback of Notre Dame, multi-shouldered, inverted head and shoulders, okay? There's very clearly a horizontal resistance here. Maybe you don't know anything about chart patterns. Very clearly horizontal resistance here. And it broke out from there, right? So step one, is it bullish or bearish on trend? Step two, are we looking for trend reversal or trend continuation? In this case here in 2017, this was a multi-month triangular trend consolidation, okay? And very clearly, once again, broke above that resistance. So maybe you don't know anything about chart patterns, maybe you don't know anything about trend continuation, whatever. But at the very least, horizontal lines, did a video on that, check that out. Something else you can look at is say, oh, we consolidated here in 2017. We're consolidating here again in 2020, almost 2021. Let's look what happened previously at around 28, 30 cents. Just mega moon, right? So the evidence is mounting that there's a trade set up here, that there's a trade to be taken. And we can look at how the chart looked using the replay function on TradingView, how the chart looked at 30 cents, 32 cents, right? This is what I saw a couple days ago. I was like, okay, lots of other people saw this too. This is probably going to lead to continuation. So your entry is around 32 cents, whatever the horizontal is here on, this chart here. 32 cents, basically where I got in. And what's the next thing you can do? You can measure using Fibonacci extensions. Look for the 1.618 and the 2x multiplier from high to low. So that's the next step about learning. For a breakout trade is targets using Fibonacci extensions measuring from high to low. Okay, so we know it's bullish because we know 200-day moving averages, we know the cloud. We know we are looking for some sort of trend reversal. We know about chart patterns. We know about horizontal lines. We know it's a pseudo target, right? It doesn't always go that high. Sometimes it goes higher in this case. So we're looking for all that. So our trading plan was we're going to buy the breakout. We're going to sell around 50 cents, right? Or we're going to sell from 43 to 50. So, I went to bed, woke up, price was around 41 cents. So what was the good thing there? I made money while I was sleeping. I made money while I was taking my hands. I didn't watch it like a hawk. I did nothing, right? I was literally absent from the chart. Got up, sold around 41 cents. Didn't hit 43, didn't hit 50, didn't even range. I just didn't like how it looked, which was my first mistake. I should have not been looking at it, right? So I got out around 41 cents. Already I'm doing things I shouldn't be. I should be sitting, right? I should be let the runners run, as they say, let the runners run. Target was clearly higher than 41 cents. Something else you could do is set partial closes at around 43, 44, 45, 46, 47, 50, 55. Set like 10% of your trade for higher than expected, because you never know, right? Something I failed to do was reevaluate the chart. And this is what you typically have to do on altcoins. Once you see something on higher time frames and it moves, you have to look at it on lower time frames because oftentimes it will reconsolidate and continue. And that's exactly what happened here. We had this bullish ascending triangle for a couple days. I mean, this is just plain as plain can be obvious if I was looking at it. And I completely missed the reentry. Something I'm terrible at. If you get out, always reevaluate the position. Always keep watching for trend continuation. So in this case, it kept going and it's at 70 cents now. So look, I left an insane amount of money on the table by not forgetting about the position, not being, a dead person, and just hodling for higher prices. Something else you can always do, talking about fib extensions, altcoins in particular, I've seen it on ETH so many times. You'll have your targets, right? But then it'll reach for the 2.618. It'll reach for the 3.618. So maybe this is a rare occasion of Ripple being Ripple, but were these facts ever more true than they are now in this specific case for me? And for a lot of people, I know a lot of people who get their $22 for the day and they're happy when they could just sit on their hands and do nothing. So today's trading tip for this Tuesday is definitely let the runners run. Reevaluate your past 10 trades. Are you leaving money on the table by not being patient? Do you need to be more patient? Do you need to take partial profit? 2x selling half on a double is a meme, another meme where you get your initial capital back that you put in, and then you let the rest do whatever. It can go to zero, it can go to infinity. That's another way to let the runners run. Something else I need to be doing more. So let me know in the comments, have you left money on the table? Are you not patient enough? Looking back on your trades, are you reevaluating, saying to yourself, I would have made so much more money just doing nothing. Just being dead, literally being dead, Maybe that's better off. Take the position, have a firm stance on where you think it'll be. If it's wrong, close it. If it's right, leave it open.